Hey, good morning, dear students. Hope you all are doing really well. So, as you all know, we were continuing with chapter first of accountancy, that is financial statement of a company. Okay. So, we have already discussed the meaning of financial statement. What type of financial statement we're going to discuss here? We have already discussed. Then, balance sheet of a company. We have discussed the prescribed format of balance sheet as per Schedule 3 of Companies Act, right? Now, taking the concept ahead, as you all know, we have discussed the very first head, that is shareholders fund, right? Shareholders fund and their subheads, share capital, reserve and surplus. Okay, we have discussed these two. Taking the concept further, today I'm going to discuss money received against share warrants and many more new concepts. Okay, but before going on the further concepts, I would like to tell you that these chapters, the following chapter will discuss all the balance sheet items, all the items or major heads and subheads appearing in your statement of profit and loss. Now the question arises, which type of questions they ask from this and what type of knowledge you're going to get out of it. So always remember, balance sheet of a company is a huge, okay, and balance sheet always serves you a summary, while note to account is a detail of that summary provided in balance sheet. So here this chapter will serve you both. We will get the knowledge of how the company prepares balance sheet, what are their major heads and subheads, and in exam they may ask you to prepare a balance sheet, to prepare a note to account, to provide major head and subhead of some items, etc. Okay, so let's take the concept further. Money received against share warrants. Okay, so first of all, let's get the meaning of share warrant. A share warrant is a financial instrument which gives holder the right to acquire equity share. Okay, share warrant is what? It is a financial instrument. What it does? It provides the right to acquire equity share, and disclosure of money received against share warrant is to be made since share are yet to be allotted against the share warrant. Okay, so if it happens that we have received the money but we have not yet allotted the share warrant, so this is we gonna reveal in shareholders fund. Okay, so what becomes the major head? Major head becomes shareholder fund. What becomes the subhead? Subhead, money received against share warrant. Okay. Next point, share application money pending allotment. Suppose sometime what happens, a company actually receive allotment money, application money, okay, on the last day of accounting year. As you all know, our accounting year extends from 1st April to 31st March of next year. Okay, so possibly sometimes it may happen that the due date of allotment falls after balance sheet. So in order to record this, we use share application money pending allotment head. Here we record all those shares whose date of allotment falls after balance sheet date, and share application money not exceeding the issued capital. Okay, it means some or the other way we have to record them because we have received money and we gonna allot shares, but on the date of balance sheet we have not yet allotted. So for that we have separate head, share application money pending allotment. Top tip, share application money to the extent refundable over minimum subscription is not met, such amount shall shown separately under other current liability. Okay, sometimes suppose what happens, a company received application money below 90% of the total subscription. Yes, always remember, a company must have minimum subscription criteria fulfilled, and minimum subscription says that a company must have 90% of the issued share subscribed. Yes, a company can allot shares only in the condition where their 90% shares are being subscribed by public, and if it is not, then they have to refund that money. Okay, they can wait, but after that they have to refund the money. Or sometime what happens, over subscription is there. Over subscription means, suppose company applied for issued 1000 shares and they receive application for 1200. Okay, in this case we are not going to allot shares above 1000. So what we have to do, we have to refund the money. So refundable or minimum subscription not met, both the amounts are shown under other current liability. Okay, so this was your shareholders fund head and the share application money pending allotment. Up next is non-current liability. Okay, let's see the balance sheet once again. See what we have discussed. We are discussing equity and liability. What we have discussed, shareholders fund, where we have discussed all these three items. Share capital, yes, done. Reserve and surplus, done. Money against share warrant, done. Share application money pending allotment, we have done. We are heading towards our new major head, that is non-current liability. Non-current liability includes long-term borrowing, deferred tax liability, other long-term liability and long-term provision. Let's discuss them in detail. Long-term borrowing, non-current liability, long-term borrowing. Loans which are repayable in more than 12-month operating cycle, we have already discussed these operating cycles, right, are classified as long-term borrowing on the face of balance sheet. Okay, whatever amount or whatever you're borrowing which is repayable in more than period of 12 months comes under the category of long-term borrowing. These include debenture and bonds, long-term deposits, term loan from a bank, long-term loans and public deposit. Yes, company may receive lump sum loan from way of public deposits. All these are the subheads. Okay, so non-current liability is the major head, under which long-term borrowing is the subhead, and these are the subparts of this subhead. Okay, now deferred tax liability. Deferred tax liability is not in your course. Okay, accounting treatment not to be evaluated as it is mentioned here. Okay, then other long-term liability, trade payable. Class, when you were in 11th standard, you go through the meaning of trade payable. Yes, trade payable includes all those items where we have creditors and bills payable. Okay, so when I'm discussing other long-term liability, these trade payables are more than the period of 12 months. What you have seen in class 11 was short-term trade payable. Okay, these are long-term trade payables and they extend for more than the period of 12 months, and these are being put under the head other long-term liability. Premium on redemption of debenture. Yes, premium on redemption of debenture. When we gonna redeem our debenture, when we gonna pay them off. Okay, when we gonna repay them. So that is also recorded in other long-term liability. So these are your major heads, trade payable, sorry, not major head, the subheads, trade payable and premium on redemption of debenture. Last, long-term provision. All provision for which related claims are expected to be settled beyond 12 months after the reporting date are classified as long-term provision. See, we have seen in class 11 provision for doubtful debt, provision for discount on debtor, provision for depreciation, right? Here I am discussing long-term provision which are expected to be settled beyond 12 months, okay? And these are provision for employee benefit, retirement benefit to employees, provision for warranties, okay? Up next is current liability. So our next major head, current liability, and it includes some subheads: short-term borrowing, trade payable, other current liability, and short-term provisions. Short-term borrowing, bank overdraft, yes, you know it very well. Loans repayable on demand from bank and other parties. Okay, loans which are repayable on demand. Repayable on demand means they don't have any expiry kind of date. Okay, they don't have any settlement date written in the agreement. Okay, as in when the other party demands it, we have to repay them. Short-term deposit payable on demand. Okay, so these are the sub parts. Trade payable. Now here I am discussing about trade payable in short term. Okay, so a trade payable refers to the amount due on account of goods purchased or services rendered in the normal course of business. Obviously we gonna purchase lots of items on credit. We gonna purchase our goods that we gonna resell in credit. Okay, so at that time, whatever the creditor arises, whatever the bills payable arises, which needs to be settled within the period of 12 months, are under the head trade payables. Okay, other current liability, unpaid unclaimed dividend. Yes, sometime it may happen that the concerned party didn't claim their dividend, but possibly they may in future. So that's why we put it under category of current liability. Interest accrued and due on borrowing. Obviously, if we borrow, then they are meant to be paid interest. So these are under other current liability. Income received in advance. Okay, income received in advance. Why this income is our current liability? Because obviously we have received income, but yet services are being pending on our part. Calls in advance and interest on calls in advance. Outstanding expenses. Provident fund, ESI, GST payable. Current maturities of long-term debt. Now, what is current maturity? Current maturity means when we gonna repay any long-term loan in this very financial year. Suppose I have a loan of 10 crore and that loan, the maturity period of that loan arise in 2021. That's why if something which we gonna pay in current financial year, it comes under the head other current liability. Till date it was a non-current liability. Okay, but in the in the year of being paid, it becomes current maturity. Application money received for allotment of security, unpaid matured deposit and interest, unpaid matured debenture and interest. All these comes under other current liability. Short-term provision. All provision for which the related claim is expected to be settled within 12 months are shown under the head current liability, like provision for tax, provision for doubtful debts. Up next are the second part of our balance sheet. As you all know, we have two main parts of balance sheet. First part is equity and liabilities. Second part is asset, because we work on a very basic equation that assets are always equals to capital plus liability. Okay, so let's continue it further. Items appearing under asset and balance sheet. First, non-current asset, fixed asset. Obviously, they are fixed in nature. It means they are meant to be acquired for purpose of reuse in business, not for the purpose of resale. Yes, and they may be both tangible and intangible. Okay, what are the tangible and intangible assets? Tangible assets that we can see and touch. See here, example: land, plant and equipment, vehicles, livestock, building, furniture and fixture, office equipment, computer and related equipments. These are your tangible assets. Fixed assets are the one which are meant for serving us more than a period of up to the life of business sometimes. Okay. Intangible assets. Intangible fixed asset I'm talking here. Intangible assets are those fixed assets which are not tangible. Examples: goodwill, computer software, masthead and publishing titles, patents and other intellectual property, receipt, formulae, model, design and prototypes, license and franchise, brand and trademarks, mining rights, copyrights. These are all our intangible assets. Capital work in progress. Sometime when the balance sheet date arrives, we have some capital work or some asset under construction. So we gonna reveal them under capital work in progress head. Intangible asset under development, like patent, intellectual property, some paperwork relating to that, relating to these items is pending or is not yet ready by the end of the accounting year. So these all items will appear in intangible asset under development head. Now continue for the non-current investment. As the name suggests, these are non-current. Non-current investment are investment which are held not with the purpose to resell but to retain them, but to earn in future with them, but to maintain the level of investment. Non-current investment are further classified into trade and other investment. Let's see what are trade investments. Trade investments are investment made by a company in shares or debentures of another company, not being its subsidiary, to promote its own trade and business. Okay, so these are those investments where we invest usually in share and debenture of a company. Okay, other investments are those which are not trade investment. So I can say that other investments sometime may not be of in specifically in shares or debenture. They may be in some other ways. Okay, deferred tax asset, as you all know, accounting treatment not to be evaluated. Long-term loan and advances, capital advances and security deposits for telephone, electricity, etc. So these are long-term loan and advances. Okay. Now other non-current asset. Trade receivable to be released beyond 12 months. Obviously we have trade payable or of non-current nature. Then obviously we must have trade receivable of non-current nature. Okay, all those trade receivable which not gonna settle in a period of 12 months are come under the category of other non-current asset. Now current assets. Current investment. Current investment are those investment which are held to be converted into cash within short period. Marketable security, debenture redemption investment, investment in equity instrument and treasury bill, etc. Up next is inventories. As you all know, current assets include all those assets which are meant to be liquidated within the period of 12 months. So stock of raw material, obviously being an production unit, you may have all these type of inventories. Stock of raw material, stock of finished goods, stores and spares, goods in transit, work in progress, stock in trade, loose tools, etc. Okay, up next is trade receivable. Trade receivable refer to the amount due on account of goods or sold or services rendered in the normal course of business. Okay, so these are trade receivables and these include debtors and bills receivable. Cash and cash equivalents. please get this term very clear. What they name it? Cash and cash equivalent. It means cash and all those items which are equally considered as cash equivalents. Okay, so balance with bank, checks, draft on hand, cash on hand. Okay, see, once you people think it, all these are cash or equivalents. Earmarked balances with bank. Balances with bank held as a margin money. Bank deposit with more than 12-month maturity. All these are cash and cash equivalent. And honestly telling you, all these items that can be converted into cash within a period of 3 months, usually we consider them as cash and cash equivalent. Okay. Up next is short-term loan and advances. Other current asset. Other current asset, obviously in a business we may have prepaid expenses, accrued income, advance taxes to be paid. Advance taxes paid, not to be paid. Okay. Goodwill, patent to be written off within 12 months. Interest due on call-in arrear. Okay. So all these are your asset head. And here the balance sheet part ends. So what actually we're gonna do here, we have to learn all these items. Classification of items in balance sheet of a company under major head and subheads. Yes, actually you have to learn all these items. These are the items and these are the major heads of them. These are the subheads, and they ask question like this only. Okay, either they can say you either they can ask you to prepare a balance sheet using different major head and subhead, or they may give you items and they demand you to reveal major head and subhead of the concerned item. So have a look. Prepaid insurance. Now they can ask you give the subhead, under which subhead this prepaid insurance appear. So what you gonna write? Other current asset. Likewise, we have this much of major heads and subheads. 110 items are there which reveals major head and subhead. Okay, 110 items are there. These are the all possible items that they can ask. Okay, so here our first portion of the chapter first ends. Okay, after this we will move toward the second portion of our chapter first, which is